Sure, I liked some of your comments, and I'm not sure. You're loath to try to time this market, I think, or even try to decide when there's going to be a pivot, because in your view, if you recognize the rotations that you're seeing underlying the market, that's how you do it. You don't need to know exactly when the market makes these turns if you're in the right stocks.
Yeah, thank you for having me. That's a shade of correct, Joe. What I'm proposing to investors is that what's most important right now is to center portfolios on stocks that bring the characteristics of earnings resiliency. We should be less concerned about the causality of what the next correction is beyond just what the thesis is behind it. And the thesis behind the opining about the next market correction is centered on earnings. And so that logic loop would bring you back into owning sectors of the market that tend to perform well, that have earnings resiliency. So that's healthcare, consumer staples, and utilities. And the pivot, the portfolio pivot, is also just long-term understanding that this is a market now moving away from a willingness to pay premium for growth and instead paying a premium for earnings resiliency and dividend income growth. And so the liquidity strategy in a portfolio should allow you to move very dynamically on the front end from this earnings resiliency theme. And on the back end, the potential for rate cuts down the road, you should start really barbelling a portfolio and scooping up deeply discounted growth companies and tech stocks. And so the rebalancing trade is nailing the sector rotation trade, which is not exiting the asset class altogether of equities.
Trying to understand that. So in the meantime, you buy the earnings resiliency story, but with a pivot in mind down the road, so you nibble at some of the growth stocks that would benefit from the eventual pivot.
Yeah, absolutely. I mean, look, so many of the tech stocks now are absolutely crushed. Consumer, discretionary is another great example. But I think you pointed out many times on this show that leadership is going to matter, that not all stocks within a sector are going to rise to this occasion. We're seeing that now throughout how management teams are handling their own version of a profits recession. And so the stock selection is going to be key, which moves you away from 100% investment in exchange traded funds or ETF strategies, particularly those that are market weighted.
So JJ, do you ever go into the bottoms up camp? Do you want to talk about something Sherry said, or do you want to, should we go top down and macro and I mean the VIX is 21. What is it saying about the duration or how far this rally? I'm not even going to, I don't know whether it's a bear market rally or a new rally. I'm not even going to say, but how far do you think it goes and for how long?
First of all, Joe, if you knew it was going to happen, you probably wouldn't be here asking me questions this early in the morning. But quite honestly, some of the things Sherry said in terms of quality names, yes, of course, I agree with. But what I find interesting right now is that in the short term, we're seeing some people buying some of those beat up stocks. You look what's happened in China. And we have folks who over the last week or 2 weeks buying JD and Baba, which you don't normally see. And one of the things that I've found really interesting over the last couple of weeks is that, crude oil, obviously now just ticking above $80 this morning. The last 2 times crude's gone under 80, our clients who trade futures have bought quite a bit of crude oil futures. What's interesting to me, though, is that from an ETF point of view, USO is not a name we normally see. And over the last couple of weeks, USO has all suddenly become a popular name with our clients. We haven't seen that in quite a while. In terms of what's going on with the Fed, we see things like JP Morgan and Goldman Sachs, again, resilient names over time. I think today's speech is going to be incredibly interesting because I think one of the things that's underrated is the fact that Chairman Powell really is the one member of the Fed that hasn't backed off his original statements, at least that I've seen so far, in terms of we're going to do what it takes to get inflation under control. So it'll be interesting to see if he strikes a dovish tone today or continues with this, we have to do what we have to do to get things done. And I find that part, really interesting in terms of what's going to happen in the speech today and what it will mean for the market overall.